Welcome to the STARS program, seniors taking active roles in society. And now, here's your host, ANITA FINLEY.
So, do you think it's time to refinance your life insurance? Well, I'll bet it is, but you probably haven't known anyone to help you do it. But we have. We have found someone who will really help you do it. And his name is Robert Colson, and he is with US Insurance Auditors, LLC. And I'm really happy that you're here with us, Robert, because people don't think about life insurance. You and I have talked about it. Life insurance is either put in their safety deposit box or in some drawer, and they don't probably ever see it again because if they die, their kids see it, right?
ANITA, that's primarily exactly what happens. And thank you very much for having me today, first of all. There's actually a commercial going on TV all across the U.S. today, and the company is advertising exactly what you said. 95% of people buy that insurance policy, take it home, put it in the filing cabinet, give it to mom, she files it away somewhere, and they never look at it again until that day finally happens when they need that insurance policy. And it's really to their detriment because the market has changed, pricing has changed, and it is, to be honest with you, it's in most people's interest to look at possibly either refinancing, changing coverage, or maybe even today they can get benefits that weren't affordable or even in the market 5 years ago.
And isn't it true that we used to just think of life insurance as life insurance, but now isn't there combinations of things that take care of that but also give you health care and other kinds of benefits?
There really is, and that's the whole combination of the new hybrid market. The products today available that weren't even available 5 years ago are offering offset products such as long-term care riders, terminal illness riders. Those long-term care riders, for instance, can be used to access the death benefit on an accelerated basis if somebody needs a nursing home, assisted living at their home, advanced therapy for maybe an early diagnosis or onset of a disease, cancer. So these new hybrid products are allowing the consumer more options with the policy that they could have that they couldn't have 5 years ago.
So when someone uses it for something else, then it takes less, then they just don't get as much at the time of their death. But as far as I'm concerned, who cares, right? Because they need the money now.
That's exactly correct. It's bird in hand. If you have a $500,000 life insurance policy per se, and that is a cash value policy, and it has the riders on it that let you access that cash balance through the long-term care trigger, it allows you to access that and accelerate the death benefit. And you are actually exactly correct. It does take away from the eventual death benefit, but if that client, consumer, could access that policy's benefits for his living benefits, enjoy his life if he was in a terminal situation, if he wasn't and he needed to be put into a facility for the next 5 or 10 years of his life, he could afford that down payment for that facility. And as you know, ANITA, a lot of those facilities today require upfront payments as well as ongoing payments. So what the market and the new policies today allow us to do is be flexible for the consumer.
Why is that change, Robert?
Well, the market's changed just like all investment instruments today have changed. And it's really for many factors. The pricing model has changed in all life insurance companies. And what they've found is that the mortality tables that the actuarial companies have actually been using to price the intrinsic cost of what it costs you to buy a policy at a certain age has been incorrect. They've actually been off the tables between 25, 30, some 40%. So they were guesstimating people's life expectancy off at least 25 to 40%. Since that has come to the forefront, the life expectancy companies have finally admitted they were wrong. 21st Services, AVS, several of them have redone their tables in the last 3 to 6, 7 years, and they keep redoing them. And what it's caused is a repricing in the life insurance business. The life insurance companies know now people are living longer. It reduces the cost of insurance for everyone, young, old, across the board. That's a main factor. Interest rates are also a huge factor in the pricing of underlying insurance. So those factors, just like the mortgage industry years ago, have caused a onset or a rush for people to be able to save money on their life insurance. And literally, people have purchased life insurance as few as 3, 4, 5 years ago. Our company has saved the many estates 20, 30, 40, 50% on the cost of the life insurance for the estate.
That it just amazes me, and because I don't really understand a lot of the financial aspects of what you do so well. Because one thing that I know, that we're talking now about life insurance, but you actually are, of course, you can handle so many other things that have been. I mean, you do estate planning and annuities and long-term care and so many other important aspects of someone having money to live on. In fact, I will tell you, I wouldn't have thought about it had I not met you first, but I just saw a movie, I'll See You in My Dreams. It's with Sam Elliott. They asked me to interview him down in South Beach, which I did, and the star, he's the star, but then there's a female star, and she's living a very nice life. And then he says something to her about her husband. Sam Elliott's trying to have a little affair with her, and he said, so you're living this very nice life, and how is that? She says, well, he died and left life insurance. And so I thought of you, because usually you don't hear that in a movie. And that's what happened. And so she was living now quite comfortably, and it's because of the insurance policy.
And that's exactly right. And the matter of fact is, and the statistics show us, that 75% of Americans have little or no life insurance at all. And that's extremely concerning, obviously, with the amount of baby boomers coming and passing through retirement at this point in time. And life insurance has proven over time to be the best investment vehicle and the safest investment vehicle available. Now, with the new products available, you can do everything from a life insurance policy, from a simple death benefit to offset estate taxes, to offer financial stability for a family when the earner and the family may pass away. But more importantly, what life insurance today is offering the average person is tax-free estate planning and tax-free retirement planning. A lot of the hybrid vehicles today can be used as just like an investment account, whereas the cash balances can be withdrawn tax-free on a tax-free basis upon retirement. So what we're doing, more so than just selling life insurance and doing annuity and estate planning today, is we're providing tax-free estate planning and tax-free planning for many business people, executives, and just the regular person on the street.
Wow, that's a lot. And something that appeals to me is the philanthropic planning, because there are a lot of people who do have a lot of extra money. They want to be able to donate it, but they want something back for it. And how does that all work?
That is another exceptionally great idea for those that are fortunate enough to have the assets and means to do that and do philanthropic planning for a church, a hospital, a community, whatever they may want to do. There's several ways they can do it. They can do it by attaching some of their own estate to donate to Boca Hospital through the use of a life insurance policy. They can actually do it through premium financing platforms, whereas we can actually put plans into effect that donor essentially would never have to take any assets or money out of his own estate. A bank would hold the policy as collateral, lend the money for the premiums, and when that person dies, the church, the hospital, the synagogue of his choice would still receive the full death benefit minus the loan against the bank. So a person, an accredited investor, a person with some assets, could get into that type of philanthropic planning environment and not ever pull a penny out of his own pocket.
And that's something that you can do and you can help them with.
That's something that we do, yes.
So if someone would call, and I'm going to give people your phone number, you're listening to Robert Colson. And Robert, really, this is a company that you have, I guess you started it, or you're working with them for a long, long time.
Yes. Actually, I started that company, and this is something I've been doing since 1991.
He's so young, but he's very serious about this. In fact, I know I met his mother, so it's okay. Once you meet someone's mother, you feel good. She's such a wonderful woman. In fact, she's in the healthcare business. She's a nurse, and she's been taking care of older adults for a long time in a wonderful community. So let me just give a phone number. I'm going to give you an 800 number. It's 1-800-218-5033. 1-800-218-5033. They are located in, actually you're located in Boca Raton. So we also have another number, but call the 800 number for information. Now, the reason you want to call is because you may have an insurance policy that is sitting there somewhere in your big mess, in your drawer, in your safety deposit box. Maybe your kids have it now. Just get it out and invite Robert into your home, and he will then look it over, and he will tell you, and he's pretty sure, of all his experience, he always seems to be able to find people a policy that's going to give them the same benefits, maybe even more, and they have to pay less for it. So how can you not take advantage of this? As he says, 68% of people are overpaying for their life insurance. Rates have come down dramatically over the past 15 years, and he will do this for free for you to analyze your life insurance, give you an audit, and there's no obligation, no hidden fees. And so if you want to save money, why don't you do something like this? I think this is a natural, and I do want to clarify different insurance policies because not everybody understands them. This is what do we call a whole life? Why don't you go through those?
There's actually several types of policies. Okay. Of course, you have the general term policy that only lasts for a specific time, builds no cash value, and at the end of the term, there are conversion privileges in some of them, but 95% of them, the coverage terminates and the money goes away as well. There are new term products that actually have return of premium features so that you can actually pay into term policies today for 10, 15, 20 years. And if nothing happens on the death benefit side, on anyone's dead or deceased in that policy, they will actually return 100% of the premiums paid on that policy. That's called a return of premium term policy.
Why will they do that?
Because they can offset, and again, the reason is because every insurance company uses their own mortality tables, but the bottom line is 88, 89% of term policies have never paid a death benefit. So the insurance companies are winning 89% of the time. The average consumer never cashes that policy. They lapse it. Kids go to school. They quit paying for it. The house is paid off. Dad and mom are retired, and they don't want to pay the premium anymore. But for people who have newborn kids, they might not have enough money to buy what's called a universal life policy. They can go into a return of premium term policy with the guarantee that they will get their premiums back at the end of 10, 15, 20 years. The next type of insurance, which is the most popular today, is called universal life insurance. And those come in all different styles, survivorship policies, which is a second to die, and individual. But universal life is the most flexible product. It's a permanent product. It's a cash value product. And it's one that you can take loans against for your own purposes to buy a home, put kids in school. The flexibility factors are you can skip payments as long as there's cash value in the policy. You can even skip years if there's enough cash value in the policy. So it's a very flexible policy, and it's the most popular in the market today. The oldest style policy out there today is what's called whole life, and that's a traditional what we call door-to-door policies. The guy used to come and collect the payment from you once a month. And although those policies are still exceptional, they're not doing the volume they used to because of the invention of these new products like the universal life and the hybrid products that allow more flexibility for the average consumer. Now, you can never say one's good for one or another. You have to individually speak to the consumer, the person, and figure out what the best fit is for them. And it comes down to time, money, and what their horizons are. Do they want something for estate taxes? Do they need it just to cover their kids? Are they worried about the mortgage if dad's only one working and something happens to dad? So each person has a different policy fit, and that's why we can never generally say just buy this policy because it's the cheapest. just do this one. It has the shortest duration. Every consumer should have a different profile, and they should have a different policy.
That makes a lot of sense, Robert. Robert Colson is our guest today, and Robert Colson can be reached at 1-800-218-5033. And you can also get him on the web, which is usinsuranceauditors.com. usinsuranceauditors.com. There is one other kind of policy, which is, I think it's very inexpensive, and young people seem to buy it, and it ends at like you're 50 or 60 years old. What's that called? Those are the ones that are...
Those are just some child education programs, but I'm not exactly sure what you're referring to there.
Aren't those the policies that they don't retain any value? I mean, if you die, it will pay you a certain amount of money, but maybe that's the one that you were referring to before. It's not whole life, it's nothing like that, but...
That's term.
That's term, that's what I meant.
Yeah, term insurance.
Term insurance.
Is basically for a specific amount of years, doesn't build any cash value, and is traditionally written to cover mortgages, children...
Oh, that's what you were talking about.
On a certain time period.
Right. And you were saying, though, with that, they collect... Very few really collect on those because they stop paying on it.
89% have never paid a death benefit. So that's why they're cheaper, obviously, but they don't offer any flexibility. The conversion at the end of the term is very expensive. And if your health has remained static or is the same, you could literally go into the market and buy a better product. Even if you're into the 10th year or your 20th year on a term policy.
Do you know what people say when I've asked them, do you have insurance? Or they'll say, like when I had my long-term health care insurance where I have it, they say, I'll just take the money and save it. Why do I have to pay to an insurance company? They don't save it. I mean, that's just, they see it in their mind. Well, if I write that, but they don't literally if they put it in the bank, and even then I don't think it would work because it's not the same. They can't make that much money by just putting that in there because nowadays there's no way to really invest it properly.
That's exactly correct. And it sounds good in a hypothesis, but it never happens, as you know, Anita. No one ever sticks that money in the cookie jar.
Or in an envelope like years ago.
That money goes into the bank account, gets spent, and that's one of the greatest things about life insurance is it allows flexibility, but it allows a great investment vehicle for people and to do it very safely. There's many ways you can go onto the market today, but let's face it, the Dow's at 18,000. We have a NASDAQ at 5,000. So traditionally, a lot of clients we work with have enough exposure to those markets. And what we do is we're working with what we call their safe money. What we put into action for people, we will have limited or zero risk. One of the two, either limited or zero. And limited, I mean, you can never, ever lose your principal. Some have underlying gains, and we're talking different products now. But what we work in, and most insurance products in the market today do, is guarantee the client one thing. You can't lose your money.
Amazing.
You can make money, but you can't lose money.
Well, I certainly am so impressed with your organization and what you do because people really do need help. And I think of all including the men in this world, they always blame it on the women, don't know what they're doing. But I think that probably insurance is one of the most non-educated program for the individual. I don't think they've ever had classes on it. I certainly have. I know about a lot of things, but excuse me, when I get an insurance policy, I gloss over it. I have no idea what it's all about.
That is so common, and that's what we hear every day. And that's what makes my job, I say, easier. A lot of people say harder. It's a very simplistic business on the front, but with the amount of products and bells and whistles that are offered today, it can be very confusing for the consumer. That's why myself and my advisors do what we do, because it is very hard to look at a insurance policy that they give you, which is 40, or even the illustrations. They're 40, 50, 60 pages long. And most of them aren't in layman's terms. Most people don't understand what the different variables are into the growth accounts and the non-growth, and is it making money, is it not? It's very confusing. That's why we say, just like your stock portfolio, just like anything that you pay for on a weekly, monthly, or yearly basis, if you're not looking at those prices and saying, could I save money on this? You're truly missing the boat. It's like somebody who still has 20 years left on a mortgage and they're still paying 4.5% when they can walk in Wells Fargo tomorrow and drop that over a point and a quarter. It doesn't make any sense. You're giving your money away. Stocks should be looked at all the time. Any investment vehicle should be looked at a minimum of once a year. And again, our services are 100% free. We're very non-intrusive. You don't have to tell us your whole life story, your social security number, every medication you're taking. We don't need to do all that. We can ask you 4 or 5 simple questions, ask you what you currently have, what your objectives are, and give us a day to look at all of this and run some numbers for you, and we can come back and tell you. And we'll give you the answers. It'll be either you have a great policy, continue on, next year call us, we'll look at it for free again, or we can help you save some money.
What a great opportunity for our listeners and our readers of Boomer Times. We always are so happy when we have people like Robert Colson and his company to get to you so that you can be helped. Because just as I said in the movie, this woman was really enjoying her lifestyle very much, and it all came because of the life insurance policy. I don't know many people who are living on their life insurance policy because I never ask. And you wonder when these people, many women especially, are living quite well and their husbands have passed away, and I'll bet that's what it is.
There's no question. I have it in my own immediate family. I have it for my clients for many years. And there's not a Saturday or a happier day than ever delivering a death benefit check to the living spouse or the kids.
And you do that?
I've done it in
other words, they don't mail it, right? They give it to you, which I think is so nice that you can hand it to them. And
yeah, but I can honestly say without what we or many insurance people have done, people wouldn't be living today like they are living, and that's for sure.
I think that's a very important point, and I wouldn't have thought about it had I not realized, because the other women in this movie are living in a very upscale community, just like where your mother works, and it costs a lot of money, and they don't look like they were executives in big companies that made the money. So either their husbands made the money through stocks and bonds, or it was a life insurance policy.
That's exactly right, and we see it every day. People are extremely underinsured. And the old adage in the insurance business is nobody wants insurance until something happens, and then they want twice as much.
I can see why that's important. So when someone does decide to come to you and they want to buy life insurance, how do you decide how much money they should really have that it should be worth? I mean, it could be $1 million, it could be $200,000. How do you do that?
Well, we do a financial profile. We build a financial profile. It's know your client. So we ask the questions. We find out what the objectives are. What are your available assets? What are you trying to offset? Is it an estate tax problem? Are we trying to avoid Uncle Sam? Are we trying to offset kids' liabilities if something happens to you and they're all in school now? Are we trying to offset that house that you just bought out in West Boca? There's many. Are we doing a buy-sell agreement on a business that you and your business partner might have in case something happens to one of your business partners? Are we trying to gift your kids portions of your estate tax-free so that you don't have a tax bill waiting for them when both of you are gone? So every scenario is different, and that's why we build a profile. That's why it's a simple, quick few questions on the front. We need to know what type of insurance you have. We need to know what your current health is. We need to do your basic ages, smokers, none, and that's pretty much it. Then we can find out how long you've had the policy, and we can run quotes for you and see if we can make changes, give you advice on better product that might be available at the same price point, or simply just give you the answer that what you have is great.
Go back to the health. So why is health important? What is it? What do they look at?
Well, almost all except for guaranteed issue, which is basically funeral insurance, funeral expense insurance, which is what's called guaranteed issue. which are really small policies. They're, 10s, 25, some companies will go to 50. So regardless of your health, for certain premium uptick, they'll write pretty much anybody. The rest of the insurance is what's called underwritten. So underwritten for simple cases like small value term insurance, they'll just pull what's called the MIB, the Medical Information Bureau. They can quickly see what scripts a person's taken, what prescriptions they've taken, when they've been admitted to the hospital last 10 years of their prescription history. So on a small $50,000, $100,000 term policy on a 21-year-old Olympic athlete, that'll go through what's called jet issue. They'll look at the MIB and they'll issue the policy right away. Anything with a death benefit of above 150, 250, that level and upwards is going to go through full medical underwriting. They need to know exactly what their guesstimate on that person's life expectancy could be compared to the same person across the country in the same age group and the same health. So each insurance company has their own internal tables based on their book of their clients. So what they do is they look at a person, 48 years old, male, non-smoker, 5'9", 185 pounds, and they will price that person based on their medical history and their prescription history. So all those are medically underwritten. So if anyone has had one of the majors, prior heart attack, cancer, stroke, that's why they medically underwrite a file, so they don't have somebody coming in who's 2 steps away from the grave wanting to buy $1 million life insurance policy because they know that they're on their way out. So that's why those have to be underwritten, and that's why the health issue is more than not the most important thing.
That's a lot of stuff that I had no idea about. That's not something that the typical consumer understands. That's why I'm so happy that you're here, because you probably spend hours with people. I can see that because it's a lot of information. So Robert Colson is our guest, and that's been great. I'm so happy. I hope that people who do have life insurance policy, call him. See if you're paying too much. Talk about some of these other things that we just discussed. They're very confusing, but he'll make it very easy for you. His 800 number is 218-5033. That's 800-218-5033. Or you can go to his website, which is usinsuranceauditors.com. Thank you very much, Robert, for being here with us today.
It was my pleasure. Thank you very much, Anita.